This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Ben Mackay, principal at Evolve Capital. Evolve Capital is a private equity firm focused exclusively on leveraged recapitalizations of entrepreneurial businesses. They provide entrepreneurs with liquidity up front and also upon exit through their retained equity stake. In between, they provide professional management and a strong partnership, which increases shareholder value and attracts more potential buyers. Their entrepreneur management team partners focus on positioning companies to maximize value upon exit. Ben, thank you for joining us.
Thanks for having me.
So what was your background before investing in early stage companies?
I've got kind of a long, varied background, so hopefully it's interesting. I was actually a guide in Alaska for quite a while, and it ended up back at business school. And then after business school, I was living in Jackson Hole, Wyoming, flying paragliders, and then ended up doing small business lending for Wells Fargo, loans of $25 million and smaller. And then I ended up meeting the principals at the time at Evolve, and they asked me to come down to Dallas, and that's really how I got started. And that was back in 2007 or 8. And since then, I'd say we've averaged probably 1 or 2 acquisitions per year. And we've got a long history in healthcare services. Probably about half of our portfolio typically is Medicare or Medicaid reimbursed home healthcare, hospice, behavioral health type businesses. And then we also have some specialty manufacturing, and then generally sort of business services type companies. So one is a clean room cleaning business, very critical environment cleaning business. And in the past, we've had other things like on the manufacturing side, like power management components, highly engineered, smaller components. We had a bottle filling and capping machine business that sold predominantly into the craft beer industry. So we are really all over the map. And I'd say at this point, we invest our own money in these deals, and we don't have a defined hold period. And we really enjoy working with founders of businesses because it's always a unique group of people.
Great. Well, thank you for that. So what excites you right now?
It's definitely a shifting landscape. I think when COVID hit, a lot of things, kind of the brakes were hit a little bit on a lot of deals. I think now, thankfully, we've seen certain parts of the economy come back well, and others, just because of the sort of customer dynamics that have been created by COVID, there are other parts of the economy that aren't going to be doing well, like restaurants, for instance. We've never really been involved with restaurants or construction or real estate. So I guess long story short, I think there's going to be some good deal flow coming in 2021. I think there's going to be some really good activity, particularly with the administration change, potential increase in taxes. And I think there's going to be a lot of motivation for, founders or owners of companies who need a liquidity event or a transition or trying to work on an ownership transition to come to the table and look for partners that are excited to kind of pick up the ball and run with what they've created.
Great. So what's your advice for people investing in startups? What do you tell them to do before they write that first check?
As far as investing in startups, I'd say for us, we're a little later stage than a startup, more sort of 5 million revenue to maybe 30 million in revenue, 1 to 5 million of EBITDA. So established business has been around for a while, has a track record. But I'd say one of the big things, a lot of people think finance is all about the numbers and private equity is all about the numbers. And I'd say, it's really more about the people and making sure you set up a partnership. We always call it a partnership because our deals always have the founders or the sellers retain ownership with us. And so you just want to make sure that the deal is set up where everybody's motivations are aligned and the seller's excited to continue to be involved. I'd say that's one of the biggest starting points.
Great. And then on the other side of that table, what's your advice for people running startups? What do you tell them to do?
I think one of the biggest things is you want to think about what your end game is from the beginning. So where do you want to end up? And I think that can be really helpful to even talk to private equity guys and buyers of companies. Well, hey, what are you guys looking for? What does it need to look like? What are the key dynamics around a business that you look for when you're thinking about investing or buying a business. And if the founder can kind of sort of steer their company into some of those aspects that make it attractive, then it just really helps.
Great. And so let's talk about the state of private equity investing. How do you see the industry evolving here?
Well, there's been I think one of the biggest dynamics that I don't think it's been talked about, at least from what I've been reading, is with COVID, there were probably a lot of businesses that got hit pretty hard. And there's been a trend of sort of independent sponsors for a long time coming up. And I think that dynamic's going to be tested a little bit. The independent sponsor world might be tested a little bit now that everybody's had to kind of dig in. A lot of lenders have had to step up and kind of support businesses that may have been sort of lightly supported by the original independent sponsor, for instance. There's been a lot of pain out there, really, for people that were already invested in companies. And I think I'm guessing that the private equity world might shrink a little bit. The buyers, kind of the real buyers that are left standing are going to stick around. And the folks that want to do kind of one-off deals or just one by itself, might be met with a little bit more scrutiny by sort of the financing community. That's something that I think might start to exist. And other than that, like I said, I think deal volume is going to be up.
Well, you've talked a little bit about your criteria, but can you flesh out and tell us more in detail about your investment thesis?
Yeah. So we target a size range, sort of that, like I said, that 5 to 30 million revenue, sort of 1 to 5 million EBITDA or cash flow range. We target that range because over our experience, which is more than 20 years, we've found that when a company reaches that size range, it has a critical mass. They probably have somewhat of a management structure, and they've built a business that is probably, hopefully sustainable. So it's got some real weight behind it, but it hasn't reached the level where they've had to build out their sales team extensively, or they may not have a CFO, for instance. And it's at that stage where a founder or the owner of the business is probably wearing like 5 or 10 different hats. And they are probably doing a number of things that they don't really want to be doing. And they maybe have gotten away from the things that they love to do, which is why they got into the business in the first place. And so that allows us to step in with our area of expertise, which is helping to pull some of those tasks off of the founder's plate and take them onto ourselves and allow the founder or the seller to get back to what they love doing most. And when you do that, that really sets the business up to scale more efficiently. So when people are doing the things that they want to do, what they're excited about, and doing less of what they're not excited about, it sounds really simple. It's not. It's actually difficult in practice, but when it works really well to grow the business.
Great. Can you talk about a startup that fits that thesis?
Oh man, they're all there. We've got a lot of them. Let's see. So, for instance, I talk about that bottle filling and capping machine company. So they had 6 employees when we bought them. They were like 15 million in revenue and 3 million in cash flow. And that's a very thin management team. And to enable to scale that, we had to bring in some HR resources, build a sales team, and then we also had to look at add-on acquisitions to diversify the customer base as well. So, I don't know. I think that's maybe one example.
Good. So you deal with a lot of startups and investors in today's world. What do you think the main challenge is today for the startup? What do you see them spending most time struggling with?
Founders and sellers are, I think in our size range, they are struggling with that. It's a classic issue of they're trying to do too much. They're not willing to delegate enough and take their hands off the reins. And a lot of times, maybe they don't want to take on the headaches of hiring and managing more people. A lot of times founders they like the front end, the sales side of the business. They don't like the finance and the HR and the other stuff, more mundane business management side of things. And so I see people kind of getting into that rut where they're just buried under the weight of everything they've had to take on to get the business to the size that it is. And to just make that leap to the next level, it's sort of daunting to think about, okay, well, how am I going to run a process to go hire a general manager that can handle all the stuff that I do right now, and that kind of a question. And that's where we come in.
Great. And then on the other side, what is the main challenge the investor faces in today's market?
That's a good question. There's so many in terms of just finding a good fit. One, I think, is finding a good fit, which I don't necessarily mean business. I really mean sort of a personality with the founders or the owners. And starting off with a good personality fit and then working through a deal that's sort of the bread and butter, the basics, in my opinion. The rest of it flows from there. I'd say, like I said earlier, the due diligence side of things, it's so helpful if the owner has a feel for what we're looking for in their business. So can you produce regular monthly financials? Just kind of getting that business ready for sale or ready for a liquidity event. There's just some classic things that need to happen, which one is having good timely financials and setting up your org chart the right way, thinking about what your post-closing role might want to be. What's your dream for what you want to do afterwards? How do you want to be involved or not involved? So those kinds of questions are important to think about.
Great. Well, you've talked about several sectors and applications, but if you had to pick one or two that you think are good immediate opportunities for investors to pursue in today's economy, what would you put at the top of the list?
My holy grail type of business is a company that would be a manufacturing business that makes components, highly engineered components. So components that require a degree of engineering specialty that are then used in a critical environment. And ideally, those components on a per unit basis are relatively inexpensive. And by that, I mean maybe $500 to $3,000, somewhere in there per unit, on a business that's making 5 or 10 million in revenue. What that means is it's a critical part that is hard to replicate. If they have an engineered component, they probably have some IP related to it. So there's some barriers to entry. And then it's being used in a critical environment. So at a relatively low price point. So your customer is not going to take a chance on buying another part, a different kind of part, if your part is already working and it's not that expensive. For instance, we had a business that made AC to DC power converting equipment for commercial ships. And the units cost maybe $500 to $1,000 each, but they're essential in converting electricity for use in onboard power. And so nobody is going to cut you out in a budget process on something that's so essential and so inexpensive, a $500 part on a $500,000 or $1 million ship, or more. Great.
Well, in the last few minutes that we have here, what else should we cover that we haven't?
Well, for me, one thing I always like to lay out there is I like to really put myself out there as a resource for founders or owners of businesses that have questions and or are curious about how private equity works, the dynamics, and anything like that. I love talking about it. It's what we do. It's what I do all day. So I'd like to put that out there that it doesn't need to be like a black hole sort of unknown area. There's certainly some unique dynamics that are classic in what we do and what my colleagues do in other firms. And I'd be happy to talk with anyone about that. And then maybe it's a little self-serving, but always looking for great opportunities. So I guess by the same token, I'd love to hear if anybody has any opportunities out there that think they might fit in that sort of 1 to 5 million EBITDA range. That could be interesting.
Great. Well, so how best for listeners to get back in touch with you?
I think email is probably best these days. My email is just ben@evolvecapital.com and pretty much on it all the time. And, try to be relatively responsive. Yeah.
Great. Well, I want to thank you for taking time to join us today and hope to have you back for a follow-up soon.
Absolutely. Thanks for the opportunity.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.